Hi everyone, Sean with Shirts for Bookkeeping here, back for another video in our tax series. Over the past few weeks we've been covering most of the common income sources, such as W-2s, 1099 NECs, where you're you provide a service for somebody else. And there's also bank interest and dividends from stocks or other sorts, and pensions, 401ks, that kind of thing. So today I figure we're going to take on deductions. Lots of people like deductions because that decreases your adjusted gross income, which means you pay less in taxes. So everyone likes deductions. So let's take a look at some of the more common ones. Today we're going to look at mortgage interest and real estate property taxes. But first, I want to show you on our 1040, which is our most common one. Everyone needs to file a 1040, almost everyone. We're going to take a look at the 1040 down here. So we're going to take all of our income, total it up, that's our total income from all the sources we've already looked at. And also some adjustments to our income, which we'll cover later. So that's going to be our adjusted gross income. Now what happens after that? Now we get into our deductions. So most people, honestly, are going to get the standard deduction. For 2024, you can see it on the left-hand side. So if you are filing single or married filing separately, you get a standard deduction of $14,600. If you're married filing jointly or you're a qualifying surviving spouse, your standard deduction is $29,200. If you file head of household, it's $21,900. So that is the amount of deduction you get to take off of your adjusted gross income, or your AGI. Which means if you take all of your deductions, such as mortgage interest or property taxes, as we're going to talk about right now, if those don't add up to that amount, 14,600, 29,200, or 21,900, depending on your filing status, the IRS isn't going to look at any of those. They're just going to say, oh, you get this amount, there you go. So in a lot of cases, you may not even need to put those itemized deductions. It's always a good idea to still include them while you're preparing your taxes, because depending on your state may have a lower standard deduction, which means you might take the standard deduction on your federal taxes on the Form 1040, but your state may have only, let's say, a $10,000 standard deduction for your filing status. And so if you have, let's say you have $14,000 and you're filing single in itemized deductions, for the IRS, for federal, you're going to take your standard deduction of $14,600. But for the state, you're going to itemize your deductions, so you get that $14,000 instead of the $10,000 that the state might have. So it's still a good idea to include all of your deductions if you're using a tax software program to do your taxes. Or if you have a tax preparer that you're sending all of your documents to, you're going to want to include those so they can put it into their software to get you the biggest deduction. So, deductions. Like I said, mortgage interest and property taxes are the two biggest sources of the deductions. So mortgage interest is going to be coming on your Form 1098. Your loan, whoever services your loan, Freddie Mac, Fannie Mae, some of the big ones are NationStar, that used to be Mr. Cooper, Freedom Mortgage, all of those ones. Lending Tree might, but they're more of a broker, so they would bring somebody else in to give you the loan. But whoever services your loan, that gave you the loan for your house or your home, is going to send you a 1098. Those should be coming soon. Those also have a due date of that January 31st. So you should be receiving these pretty soon if you haven't already. So this is going to be, in box 1, your mortgage interest that you paid. So let's say your mortgage payment was, let's make it a round figure, $2,000. Not all of that is going to be your mortgage interest. Some of that is mortgage interest, but some of it's going to the principal. So that you can only deduct the mortgage interest. So let's say $1,500 is going to mortgage interest and $500 is going to that principal, back to the loan. You can deduct $1,500 off of your taxes. So let's say it's not going to be that way for every month. It's going to be a different amount each month. But for easy example, let's say it is. So it'd be 1,500 times 12 would be what you get to deduct in mortgage interest. And so if that was the case, and again we're just using round figures just for ease, you're going to be able to deduct $18,000 in interest off of your taxes. And that's what it's going to say here in this example is $18,000. So you're going to either put that into your tax software if you're doing your own taxes, or you're going to give it to your tax preparer so they can enter it in to be able to deduct that off your adjusted gross income. Okay. Another major deduction that a lot of people have, especially if they own their home, are property taxes. You know, those taxes, they could be part of the escrow amount that you send the mortgage company every month, part of your monthly payment. Or you could be paying property taxes separately. So let's say you're in Sacramento County. I'm near Sacramento County, so that's what I'm going to use. You can look it up. You should be getting a bill. You should be able to keep your bill when you get that from your county. Or you can come onto your county's website for property taxes. And for Sacramento County, you're going to select secured property. You're going to put in your parcel number or your address. You probably don't know your parcel number unless you have that bill and you want to make sure you've captured everything you've paid in property taxes. But you usually want to just put in your address, and then that will show you the payments you made for property taxes. Again, enter that into your tax software or give it to your tax preparer. Okay. In our next video, we're going to go over some more common deductions that people have to be able to fill out this Form 1040. Okay. If you have any questions, please reach out. And if you're looking for someone to do your taxes for you, please reach out as well. My number is going to be somewhere here on the video, and I look forward to working with you. Have a great day, everyone.